Joining us now is David Morgan of the Morgan Report, who's the publisher of that publication, has been for more than 20 years now, a real specialist in gold and silver. Good to see you.
Well, thanks for having me.
Yeah, thanks for coming on. Let's start with silver. Had that big run in 2010, let's call it, nearly made $50, and then for many years it consolidated and has been in a range for quite a while, though it's ticked up to, what, I guess 18 something these days. So there are a lot of people who think that now's the time, or now's the time for gold and silver again. So give us the fundamentals on silver right now.
Right now?
Yeah.
Well, silver's been lagging gold. I said, just going back recently, that we had to see gold break the 1350 level. We saw that last year. Made a 6-year breakout. Took 6 years to get to that level. Quickly moved up to about the 1550 level. Backed off, tested, came back through. We're there now. But during that whole process, silver really lagged gold. Normally, silver in a bull market can lead gold, but not every time. So silver's gold to silver ratio has been in the 85, almost to 100 actually. It's now at 86 as we're doing this. So silver's needs gold to basically pull it up. I think once this next leg up the metals really takes off, which I'm guessing is going to be another year and a half. It's going to be a good year this year. I think we're going to see a 20% increase in the price of gold. I think we could see a 30% increase in the price of silver, which will put silver over 20 again, maybe in the 22 range. I don't think it'll stay there all year or anything like that, but I think it'll get there. I think you see some trading at that level. Once we get to those levels and they're established, then there's really not much upside resistance, and the momentum will keep building and building and building. For example, just to digress a little bit,
yeah.
The S&P was up 29% last year. I mean, come on, the top 500 companies in America up 29% on average. Unbelievable. Except within the sector, the best performing sector was the gold stocks. They were up almost double. The Morgan reports were up 63%, which is well over double. But you don't hear that on CNN or MSNBC or any financial channels.
So what's your favorite way? So you're a stock picker, or you like the physical metal? Or
I like the physical metal, but
yeah.
I'm not a bullion dealer. So I tell everyone they should own physical first. If they want to get leverage in the sector, they should get a report like mine, a financial investment newsletter that will help them do stock picking. For example, the number one pick out of the top tier was 100% gain. It's a silver stock. So if silver last year went from 15 to 30, there'd be a lot of happy silver owners. There aren't, because it didn't do anything close to that.
Right.
The silver stock did.
But you're not going to name it. You got to get the Morgan report.
That's right.
All right. So that's silver. Let's talk about gold. You touched on it. Fundamentals seem to be shaping up nicely. You've got the Fed still quasi easing, I guess you call it. So what do you think about gold right now?
Well, I think it's imperative that you own gold. I think that if you know anything about monetary history, you know every fiat has failed from time immemorial. So if that is going to happen again, and it will, and it is actually occurring, you need to hedge. You don't need to put your life savings in gold. You don't need to have your weight in gold. All you need is a portion of your assets in the gold market. That's all.
So, and again, are you talking physical and some stocks?
I think the best is physical.
Yeah.
It's the go-to. Stock market's closed down for 2 days. There's a bank problem. There's a cyber attack. There's financial warfare. Who knows? I mean, when you could buy the gold coin, you can't get more basic than that.
Right.
Now, do you need a lot of it? No, you need a hedge, that's all. After you've established that, if you want to get, like I said earlier, leverage, then you want to get in the top tier cash-rich, unhedged gold mining companies, and particularly the streamers. I mean, our worst streamer last year was up 43%, and our best is up 78%.
So Franco-Nevada, Sandstorm Gold, those types?
Mm-hmm. That's right.
All right, and last question for you, and this may be unfair because you could probably go on all day, but what would you say your overall philosophy is in terms of investing? We know you lean towards precious metals. And
big money goes in big companies,
yeah.
money in middle companies, and speculation means bet a little to win a lot. And if you go big and go home, and you put too much money in the best story you've ever heard in a gold mining company, and it fails, and the odds are worse than Vegas. I mean, 1.5% of the exploration companies actually become a mine. I've picked more companies that have become mines than anybody else in the industry, and I'm not a geologist. How does that happen?
How do you do that?
I know what to look for, and it's not necessarily the physicality of the property.
Yeah.
There's something much deeper than that.
All right.
Excuse the metaphor, but
And
there is.
the only way you find out is in the Morgan Report, right?
That's correct.
All right, thanks, David.
Thank you.
David Morgan, publisher of the Morgan Report.